What is going on, YouTube Nation? This is Dark Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit notification bells so you don't miss future videos. And it is the 2023 season for the Cleveland Browns. Maybe they're another yield trap NFL team. We'll see. A lot of hype, a lot of talk. Is there going to be some walking? We'll find out. But I want to thank Oracle Investments yesterday. We had a really good collaboration. So check out that video. I put it in the community section. And I'm going to go over my percentage distribution on M1 Finance for my fractional share portfolio. If you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Smash that like button. Let's check out my dividend portfolio right now. I want to make it clear right now, as I always say, I'm going after the real estate and financial sectors. Pretty strong. Of course, I'm buying other sectors. There is some energy. There's some other really good sectors that I'm going after. But my percentage is a little bit higher towards those companies. And I'm going to go over just briefly a few of them, maybe two or three that I think are pretty cheap right now. And I'm capitalizing on. But right now I'm at 71,264.10. Market gains down, of course, because I'm going after the real estate and financial sector. So they're up and down. They're not doing too well against the S&P. Of course, here's that $533.73. I said I would throw that amount, and I will throw it in TSLY. I'll show you that real quick. So right now, I'm at 642 shares of TSLY. I don't plan on going all in these guys. Again, I'm using their income to buy dividend growth stocks for long term. So as I said with Oracle Investments, there's the tortoise and the hare. The hare was like the high yield dividend stock. It was winning way in the beginning. And then the tortoise is real slow. Eventually he wins, like a dividend growth. Eventually the dividend growth in a lot of these companies is going to beat TSLY. That's almost a guarantee, especially really good companies out there. Look at your Starbucks. You look at their dividend growth history over time. That's what I'm really targeting on, for long term. I'm just using these guys to kind of turbocharge it because I can't do options on M1 Finance. So I have these guys kind of cover for that and, use my passive income with TSLY to buy dividend growth stocks. So that's one thing that kind of sucks about M1 Finance. You can't do options, and I'm starting to learn options trading. Let's go over my portfolio. Real quick, in that section, I just call it TSLY. I have one main holdings in here. That's one I may consider rebuying. They have a high dividend yield. Their revenue is a little bit more consistent than Altria. And again, I got rid of Altria. I just don't know how they'll do in the future. LI I threw in here, and I'll probably throw them back into my main dividend portfolio, but I'm going to explain to you why with my new distribution or percentage distribution. So I'm just going to go over the individual stocks. I have Jackson Financial at 3%, IIPR at 3%. Man, that went up big time. US Bank Corp 3%, Regions Financial Corp 3%, Enterprise Product Partners. I changed the percentage to be a little bit higher. I'm going to go over their dividend history, but I'm going to go over a few more things. GLPI, I just posted a video on them. I changed their percentage for 2 to 3%. Citizens Financial Corp, every time I walk down in downtown, take a photo, tweet on X, and I say, or post on X, and I say, I'm going to get to 400 shares. I can't wait. Bank of America, I put at 3%. Wiki Properties, I put them at 4%. One, they just hiked their dividend, and two, they're at a discount, so I'm loading up on them. I just posted a video on them as well with REITs, and I'll put that at the end of this video with those REITs. NSA, they're at 3%. Spirit Realty Capital, they're at 3%. Kroger, I have at 3%. Flowers Foods, I bumped them up to 3%. They're taking a beating and it's time to capitalize. I really like these guys. I'll probably do a remix on them. CubeSmart I have at 3%. Truist Financial Corp I have at 3%. Fifth Third Bank Corp is at 3%. Premier Financial Corp is at 3%. Capital Southwest Corp is at 3%. I'm going to show you what I'm going to maybe do with a lot of these business development companies. Target I have at 3%. Starbucks I have at 3%. Hero I have at 2%. Medifast I have at 3%. Wendy's I have at 2%. That I will be targeting them shortly. And an mREIT, I just put them at 3%, and Bank OZK I put at 3%. Looking at CSWC, this is a business development company. They're sitting at 2208 right now. I'm at 63 shares. In my section that I have for BDCs, where is it? I just called it the Star Forge. I have Hercules Capital, Owl Rock, a Blue Owl Capital Corp, Blackstone Lending Corp, Saratoga Investment Corp, and Barings BDC. All of these, I need to get to at least 400 shares. I really like the dividend growth in these guys. Now, they're high yields, so you got to be careful. So that's one thing you got to be careful with these business development companies that can blow in your face. And I don't always chase yield, but I use their income to buy dividend growth stocks. And hey, I'm not going to say no to passive income. So just be aware of that. And also, with business development companies, you guys can correct me if I'm wrong. If you make $500 worth, for example, of Hercules Capital per quarter, you have to report that as $500. And you have to understand qualified dividends as well. So make sure you do your due diligence or you're going to get whacked with taxes. And I'm sipping this Starbucks coffee. It's nice because in my complex, they hooked us up at Starbucks. So another thing I want to go over real quick is enterprise product partners. So I'm going to go over their revenue trends and dividend history. I really like these guys. This is one that's really underrated. It's a high yield dividend stock. So I'm going to go over these guys real quick. Right now, enterprise product partners are sitting at 2670. They take a beating. They're still trying to recover from the S&P 500. The average volume is 3.93 million. The market cap is 57.99 billion US dollars. Year range is 2290 to 2728. Stay range is 2657 to 2678. Its previous close is 2658. So let's go over a few more things. The one thing I like about EPD is their revenue trends. That's very attractive. So this is annually in millions US dollars. 2016, 23,000, 2017, 29,000, 2018, 36,000, 2019, 32,000, 2020, 27,000, 2021, 40,000, and 2022, 58,000. So that's pretty nice. Let's go over a few more things that we need to see. A few things, this is their net income trends. It's going up. So that's one thing that I like. Also, here's some more data. Enterprise product partners net income. The annual net income in 2020 was $3.775 billion, a 17.28% decline from 2019. Blame the pandemic. Enterprise product partners annual net income for 2021 was $4.634 billion, a 22.75 increase from 2020. Enterprise product partners annual net income in 2022 was $5.487 billion, an 18.41% increase in 2021. Enterprise product partners net income for the 12 months ending in June 30th, 2023 was $5.424 billion, a 10.99% increase year over year. The net income for the quarter ending in June 30th, 2023 was $1.242 billion, 11.2% decline year over year. I'm not too concerned about that. Let's go over earnings per share. That's very important as well. And looking at their trends, I still like the way things are going. It's going in the upswing, so that's what we want with earnings per share. That helps with dividend stability. That helps with the board of directors' confidence in hiking the dividend. So you're seeing a little bit of an upswing. The other thing, go over data. Enterprise Product Partners 2020 annual earnings per share was 1.71 or $1.71, an 18.18% decline from 2019. Blame the pandemic. Enterprise product partners in 2021, annual earnings per share was $2.10, a 22.81% increase from 2020. Enterprise product partners 2022 annual earnings per share was $2.50, a 19.05% increase from 2021. Enterprise product partners EPS for the 12 months ending in June 30th, 2023 is $2.47, an 11.26 increase year over year. Then enterprise product partners earnings per share for the quarter ending in June 30th, 2023 was 57 cents, a 10.94% decline year over year. I'm not too concerned. And again, earnings per share can be defined as a company's net earnings or losses attributable to common shareholders per diluted share base, which includes all convertible securities, debt, options, and warrants. So the trends are pretty good. You're seeing it in an upswing. Again, that's one thing that's good is you're seeing more increases now. There's just one little decline, but I'm not too concerned. Now let's go over their dividend history. So 2014, just looking at their dividend trends quarterly, it was 36 cents to 37 cents, 2015 38 cents to 39 cents, 2016 40 cents, 41 cents in 2017, 2018 43 cents, 2019 44 cents, 2020 45 cents to 21 45 cents, 2022 47 cents to 2022 48 cents to 49 cents, and then it just cracked 50 cents. A little bit of a high payout ratio. Number of dividend increases in the last 5 years and 11. Remember, they just recently did an acquisition in 2022, so they're going to have a little bit of debt. So their dividend growth in 5 years is 2.50%. If you bought one share, you made $2 basically right now quarterly, 50 times 4, with a 7.49% dividend yield. So right there, okay, with Zacks, I mean, sometimes they don't update completely. So I want to go over one thing. When I did a collaboration yesterday, MMP, I'm pretty sure, is getting acquired by One Oak. One Oak's one that I sold and I'm rebuying right now. So I just want to make that clear with I really like One Oak. That's a really good company. And I just want to go over a few more things. Chasing high yield, it's a risk. Okay, and that's one thing you just need to be aware of, but I feel okay with my investments. It could blow up in my face. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. I'm going to have a video for you tomorrow. I'm going to go over a few dividend stocks that are hot, that are at a discount. And go Browns. Hopefully these guys actually win. They may be another yield trap, so we'll see. So I'm going to jump to my disclaimer. So as a reminder, this YouTube channel is for entertainment purposes only. Do not use this in any form of financial advice. I do not give financial advice. It is best to seek financial advice with somebody that is certified to give financial advice or an actual financial advisor. Again, licensed or certified. Investing is a huge risk. You can make money, you can lose money. Again, I am going after certain sectors that are taking a beating right now. They could go even more. So I am dollar cost averaging every week. This channel just reveals to you my dividend investing strategy. I own EPD in these stocks unless if something drastically happens like a dividend cut, I will get rid of them, or something drastically happens that just is not attractive. So do not take this in any form of financial advice. You guys take care and have a great Sunday.